Welcome to the live podcast. This is space for real conversations about mindset, discipline, growth, and the process of building something meaningful. If you want to go deeper, you can find exclusive content, bonus part of episodes, and behind the scenes on Hero Hero. Link in the description. Let's begin. Hello, everybody. My name is Tony, and welcome to the next live episode. And today is going to be about trading and crypto. And because of that, I have a very special guest, Kantu. Welcome.
Thank you for having me, Tony. Hello, everybody. Hope everyone's doing well.
So, before we start, this episode has a private trading background on my Hero Hero. So, if you want a deeper strategy and clear setup, the link is the description down below. So, let's begin. So, my first question is: are you a trader or investor first?
I started off as an investor, so I considered myself an investor more than a trader. But nowadays, I've been in the trading industry, in the market industry for 4.5 years now. So for the past year and a half, I've been doing trading, but I still consider myself an investor because I think in the long term. hmm
My next question is: what is the biggest lie people believe about trading?
That there's one indicator or one tool that will fix everything. People believe that if you get something, I'll use the bands, moving average bands, for example. So a lot of people are under the misinterpretation that if they just follow the bands blindly, they'll never lose, which is a misconception because you need to have confluence. You need to look at market structure first. You need to look at price first. So I believe that that's the biggest false truth is that there's one thing that will fix everything. And that's just not true.
Very interesting. Can someone really make a living from trading crypto?
Yes. Yes. But I believe that if anyone wants to start, they should go and enter with an open mind. It's a way to let me change the question. It's not a way to make money. It's a way to multiply your money. So you're gonna want to use it professionally. Okay. If you go in there and you just rush into the market, then you will get humbled. So it's best to prepare yourself. Anyone can do it with practice, but they need to do it with precaution.
And with right team?
Yes, with a good team. A good team is always good, right? And you're on my
Yes,
team
of
too,
course,
Tony.
of course, of course. So right now I wanna talk about entry, exit, and risk. So
Okay.
my first question is: how do you decide when to enter and trade?
So I go off of I am a supply and demand trader, excuse me. So I wait for extremes and exhaustion and I trade the reversal. I trade it back to where it was supposed to originate from. So what I do is I kind of look at market structure. I only use market structure and I use market structure specifically to determine what my approach is going to be, what my best percentage of, let's just say, profitability could be. Okay. My more likelihood to win. So that's basically where I go. I look for higher time frames first, and then I work my way down because higher time frames will always take precedence.
Wow,
That's for my entry.
this sound like really like big game. It's not sound
Yeah.
easy. Absolutely not.
Yeah. Well, it's actually a lot simpler than it sounds, but I don't chase the market. I will put it in a position and I let the market come to me and then I just win. Sometimes I do lose. Everyone
Mm-hmm.
in trading loses, but the important thing is that your wins outweigh the losses.
That's
So yeah.
true. You cannot always win.
No, there's no 100% system out
Mm-hmm.
there that can win. There's nothing out there. That's just statistics.
So my next question is: what makes you exit a trade fast?
So if I were to exit a trade fast, it would be upon either immediate demand or immediate supply forming and then being consumed. So, like I said, I'm a supply and demand trader. So, if I see it immediately coming and forming, if it's going away, then I don't want to be in that trade. It's no longer going in my favor. For example, if I see demand, if I entered in demand here and then I see it growing right here and right here, if it stops growing, I don't want to be in there anymore because it's probably going to go down. So that's kind of how I determine where I exit early and quickly. And it's all based, once again, off of market structure.
So, do you always use stop loss?
Yes. Yes, I do always use stop loss. I feel like that's one of the most important things to do. That's protecting your capital. That's protecting, your opportunity to make the next trade. So, yes, I believe using stop loss is ideal, and I never take a trade without it because I have in the past. I'm sure everyone has in the past, in the beginning of years of my trading, but it's not a smart thing to do. It's not a wise thing to do because at the end of the day, you want to make another trade and you want to keep on doing what you're doing. And you can't do that if you don't have the capital to do so.
So, how much risk is per trade smart?
That is really dependent on the individual that's trading and also their size. There's a lot of aspects that need to go into it, what their risk tolerance is. So I believe for a beginner, someone should start very small and then work their way up till they feel comfortable. I personally risk 2% of my portfolio on each trade. So, but that's based off of what I'm comfortable with. I don't feel like me going any higher than that is going to do me any better. It's if anything, it's as simple as that. I'm
Mhm.
risking more. In this industry, we want to protect our capital and risk less, but gain more. So, as a new person starting into the industry, I believe it's smart to start off as something as slow as $1 and then work their way up. Yes, $1 and work their way up to what they're comfortable with. Because, I mean, you can start off at $1 and jump to $5 and you might feel
Mhm.
uncomfortable. The point of it is to take a loss and not feel anything because it's just data. So start off slow and low.
So, my last question about this is risk management more important than strategy?
I believe risk management is a strategy.
Mhm.
If you don't have your risk down to a T, what's acceptable for you, your daily drawdown, how much you're going to lose per the week, how much you're going to lose per the month, then you won't even have the opportunity to continue. It goes back to the risk. So the question was, is risk important than strategy? If you don't protect that risk or make risk a strategy, then you will not have any strategies at all. Yes, I think it is way more
So,
important.
you are saying you need to make risk, but you need to make not stupid risk. You need to make smart risk.
Yeah, you need to treat it like
Hmm.
a professional. You need to be a professional. And even if you're doing trading just for fun or just trying to make some extra money,
Yeah.
you need to trade it professionally because what will happen is you will lose. So it's not smart to risk a lot in the market. Everyone likes to say risk what you're
That's true.
comfortable losing. Okay. Because would you be comfortable losing $1,000 right now if I told you to risk it? So it's important, you know what I mean? But if I told you to risk $1 on a trade,
Yeah,
it'd probably be a little
that's
bit
true.
easier, you know?
So right now I want to talk about losses and mistakes because I think everybody make mistakes and everybody makes some losses. So what was your worst trade? Come on, tell us.
My worst trade, mm, it's been a while. I trade and I risk a lot more since then, but my worst trade, and it sticks with me to this day, was when I was over risking and I was testing risk. I was doing like $500 trades and um, extreme
Hmm.
leverage, which should only be used, precautionally. So I went in there, and at that point, I was not a supply and demand trader. I was trading specifically off of technicals, so technical indicators, bands, and FSVZO, things along those lines. So, what I was doing is not preparing myself. That was my worst trade, not preparing myself and not knowing exactly the full in or out of my entire system. I think that's where my worst trade came from. And it escalated by me increasing the risk and then losing a lot more money than I even
Can you
intended
tell
to.
us how much money did you lose?
Oh, on that trade? Well, like I said, I risk a lot. I risk more now, and things are a lot different. That was a couple years ago. But during that trade, I think it was only like a
Hmm.
$500, $600 trade. And I remember talking about it to a friend, and I was like, dang, I just lost $500. And I was like, well, I mean, that's what it's going to be. It's what I'm going to be risking anyways. But the point is I wasn't ready to risk that. Even though I knew that's what I was gonna be risking, I
Yeah.
wasn't ready. So now I'm prepared, I'm risking all the time, and it's just, okay, it's just data. But back then, it was a scary feeling. I wasn't prepared. That's why it's important to work your way up because I didn't. I skipped, and that was my work straight.
So how do you react after losing money?
How
How
do
do
I feel?
you react? Do you like? How do you feel? Or what do you do after losing money?
Well, I have no feeling towards it or anything. It's just a data point. So what I do is I take it as a loss and I look for my next opportunity. The important thing to do is to make sure you're taking trades that have a better return
Hmm.
on interest. And what I mean by that is I don't take a trade unless it's a 3-to-1 win ratio. Okay. So I need to win 3 times as much as I'm risking. And that's going to help me with my losses. So even if I lose, it doesn't feel like nothing because I know my next trade may be a winner
Hmm.
plus some. So after you're doing that for a while, you start to become numb, and the losses is just a data point. And that's what I like to call it, a data point.
So I was thinking you drinking after euros big money, or do you do some?
No, no, no. Maybe I'll go have me a smoke and I'll walk
Hmm.
away. That's important to do, is to walk away. Don't rush in. Like I said, I do look for the next opportunity, but I don't try to rush in. I look at the next structure point. I look what's better for the system.
So why do you most trades borrow with their accounts?
Over risking,
Hmm.
over risking, and over trading. Those are the only reasons why they blow up their accounts. Over risking and over trading. And it happens. I'm gonna say it happens to almost everybody because nobody likes to lose, you know? Nobody likes to lose, you know?
So my next question is leverage trading common?
Yeah, it's I believe it's coming more it's more known now. It's more common now than it was over the past
Hmm.
couple years. Especially here, I live in the United States, so it's definitely a lot more common here now, and we see a lot more younger
Hmm.
people doing it, which is really cool too.
So right now we are going to talk about market and structure. My first question in that is that do you trade with trend or against?
I trade against. So I'm a mean reversion. Like I said, I wait for the exhaustion in the trend and then I trade it the
Hmm.
retraction. I trade it back. So I I do wait for the trend to kind of end or indication that the trend is ending for me to get in.
That's very interesting because I think a lot of people want to make quick money and like do big trends, and you are against it.
Hmm.
This is very interesting.
Yeah. 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 I used to trade trends. I started off as a trend trader. As an investor, you're technically a
Hmm.
trend trader, but yeah, as I got into trading, I went to mean reversion, and yeah, I don't trade trends
Maybe.
anymore. A lot of people do
Yeah.
it though. They like to. It's very fulfilling. People like to catch the big pumps, but I mean, nothing against it. I just prefer mean reversion. I prefer something a little bit more task hands on because you do need to be a little bit more hands on and pay attention to the market to do
So
mean
like
reversion.
you don't want to be millionaire right now. You want to like work on it and be like slow and slow. Be there.
Well, look at now that you're getting into terms of money, like a lot of people are happy about money. And I like a lot of people desire money, they want to be rich. You're asking the wrong
I know.
person, Tony. I tell you, no, I'm not saying like money doesn't make me. The only thing that makes me is if my
Yeah,
loved ones are taken care of. Because when I die, I'm not taking any of that
that's true.
money with me. Yeah, I'm not taking any, and guess what? And then when I die, my family's gonna have to
That's
fight
true.
over that money,
Yeah,
the
yeah.
court, everything, and they're gonna give it. Yeah, yeah. So like, it means absolutely nothing. If I can figure out a way to make their life just easier and happier and peaceful, then that's rich to
Good.
me. But yes, I would love money. But yeah, I would love to have
Everybody
some
love
money.
money.
Yeah, you know what I mean? But
Yeah,
money doesn't make me happy. Seeing them makes me happy.
that's
You
yeah.
know?
So my next question is: do you use indicators or a pure price action?
I use indicators, but it's based off of my
Hmm.
market structure concept. So it's my personal indicators that just record my price action, so I simply don't have to anymore. So it's just PA. It's just price action. That's all it is.
So leverage dangerous or just misunderstood?
I believe leverage is misunderstood and misinterpreted. So people take advantage of the X leverage. People like to take advantage of trying to get as much gains. And that's where the misinterpretation comes because they think if I'm going to increase it this much, I'm going to make this much more money. Okay. But it's not a way to increase your money. It's a way to kind of use more money than you don't have. You know what I mean? So it's a way to preserve your capital, another way to risk manage because you're not risking your entire portfolio, you're risking a portion and then using leverage. So I believe that it should be used strategically and
Hmm.
carefully because if you don't use it wisely, once again, it will take
That's
the
true.
money from you, you will get liquidated, and that falls right into the place where no one likes to lose, you know?
So what time frame do you prefer and why?
I trade on the 15-minute and on the 1 hour chart. I use that time frame simply because it's not too slow and it's not too fast. I was trading on the 5 minute and I did some 1 minute trading prior. It's just not my forte and it's not something that I prefer. So I stick to a little bit higher time frame at the 15 and I feel that it's working great for me and I've had no bad experiences with
I
it.
think the 1 minute that must be so fast.
Yeah, honestly, I don't know if you've ever played around, Tony, but sometimes I wouldn't even be able to get my order in. It's just it takes
I
off on
play
me. So it's
I,
fast.
I play chess 1 minute. So
Oh
I
yeah?
can't understand about this different.
So
Yeah,
you have
yeah.
to think
Bro,
fast.
it's like really hard. Truly.
Yeah, see, that was the problem when I started playing the chess when you started. It was when I played chess, I'm such a newbie. I didn't use a timer. When I saw a timer, I started
Yeah.
stressing out. So yeah, you do know what it's like dealing with the
Yes.
1 minute. Have to make
Yes.
that move within that
Yes. And
minute,
it's
and it is a strategic move. So it is the same.
and is very like is like but like I think the chess is training for that kind of way.
Yeah, yeah. Well, anything with your head and you have to think a few steps ahead. That is definitely a
Yeah.
mental training for sure.
So next big topic is big money thinking. Let's go. Let's go to the big money.
All right, big money.
So how do you know smart money is entering?
How do I know that smart money is entering? I am looking at open interest. Open interest is telling me when new money is coming into the market. So if open interest is up, new money is coming in. If open interest is down, money
Hmm.
is leaving the market. That's the whole point
Hmm.
of open interest. The interest in the market is either going up or down. That's how I determine big money moves.
Do wires control the market?
I wouldn't say that they control the market. I say that they have the ability to stop the market. Okay. They have the ability to, if the market's going somewhere and they want to stop an order or put in an order to stop that, I believe that it has the ability to do so, but not necessarily the ability to move it.
So what signal is fake but people still follow?
Twitter signals, anything with a hand drawn map that says we're
And
going
like
here,
and
anything like that.
Telegram signals in the groups. Bro, it's
Telegram
so
signals.
fake.
Yeah, yeah. Well, the thing is I believe that you can find good information
Hmm.
everywhere, but you have to
Yeah.
have the experience to filter out what is good and what is bad. So, I mean, I'm sure you can go on
Yeah.
to somewhere and see like, okay, that's no good because you know something. But if you don't know, then if someone doesn't know, then they're going to think it's the truth. That's so you have to have some knowledge about it
So
before you go into something.
for our views, don't use Telegram signals and Twitter signals. Don't use them.
Don't use signals. Just learn. Just look in and
Yeah.
study the market and pay attention and see what
Yeah.
works for you. And then most importantly, test it. Yeah, test it.
So we are going to ending soon. So I have three more questions. So can emotional people ever become good traders?
Yes, I believe so. You have to because having no emotion is an emotion. And controlling your emotions is that's the whole point of it all is having control of your emotions in the market, what it's doing and how it's approaching whatever it's doing to your trade. Okay. So as long as you have emotional control, you're still technically an emotional person, but you can still become profitable.
And I think you need to be emotional because if you are not, you are a psychopath.
Yeah.
You are a psychopath.
Yeah. Exactly.
So if someone keeps uh, losing, should they stop trading?
I think that they should figure out why they're losing so much and test why they are and try to change and see what they're doing. Because first off, if they're losing a lot in the very beginning, they should be losing very
Hmm.
low risk because they're testing. Okay. So if they're testing at low risk and they're losing a lot, then they're really not losing a lot. They're just losing a lot at a little bit. So if they figure out why they're losing and they fix it and they test it and they do better, then they have the opportunity to get all that money back for those losses at that little risk. So, no, I don't think that they should quit. I think that they should practice more
Hmm.
opportunities to recognize the market.
So my last question, finish this. In trading, weak mindset something and strong mindset something.
In trading, weak mindset.
That's-
In trading, weak mindset will get you
Mhm.
wrecked. It will get you wrecked. And in trading, strong mindset will make you professional. That's what I'll leave it with because that's the absolute
So
truth.
this is it for YouTube episode. If you enjoy this episode and want to deep trading breakdown, it's on my hero. We share more detailed setup there. The link is in the description. So see you there. So thank you again to for your time and like, subscribe, comment. That can help a lot in algorithms on YouTube, and I see you soon on next live episode. Bye, guys.
Thank you, Tony.